Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check? Hi, Marty. Uh, Dan, I cannot find the stream on YouTube. I can't see it. I'm going to try something else here. Hold on, guys, if you're in YouTube, trying to correct a bit of a little issue here. Okay, it looks like I'm in YouTube now. Okay, thanks, everybody. Sorry for a little glitch here. Thanks, Dan. And thank you, Marty. Good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's really about the business of trading. It's kind of trying to separate the fantasy of what we attempt to do versus really just the business approach. Understanding that we're in an environment that's 100% random 100% of the time. And really, our objective is to attempt to define the condition of the market as it changes and also get an alignment. If we can recognize alignment, which, by the way, the market, is always auctioning or looking for too high and too low in all fractals and timeframes. If we can identify these conditions and also narrate with conditional statements potential change, then at times we will get in alignment with the market. Now, the key to this alignment, and while rotations are random in all fractals and timeframes, if we can actually define specific conditions where we can extract a statistical edge, that is really the basis of the business. Now, statistical edge, well, how do you get that? Well, I've shared 60 PDFs and a lot more material, as well as the Trader Lab participants, the community, to come together, really help you create a business plan and also a plan with a statistical edge. And the thing about it for us psychologically is we really don't do well trying to operate in uncertainty. And that brings up a lot of psychological issues and lack of discipline. And I've observed over my experience, which, as you guys probably know, is 46 years now, that I believe, at least it's a personal belief, and it may not apply to you, that anyone who comes to Trader Lab and does the work can learn how to trade. And I'm going to stress does the work. And the other part is assuming someone actually does the work, and there are psychological reasons that developing traders don't even do the work, which is part of the problem. It's the psychological issues. So over my years in this business, I've seen traders that I thought, based on everything I observed, had a really good opportunity to create a business, but they never got over their psychological issues. They could not even do the most basic element. And the basic element is the discipline to start a business correctly, to build a career, not to play a video game or to be out of control by psychological or emotional triggers. Now, it's a broad topic, of course. However, you can learn about this in Trader Lab. And again, it doesn't mean that you will be successful, because it's going to take something that you've probably never experienced before, because you're in an environment you've never been in before. So we're always going to kind of go back to the things that have worked for us in the outside world, our regular day-to-day world. But the trading world is a completely different environment, and it stimulates responses that are so primal and so strong that willpower in and of itself is not the solution. And believe me, I tried it for years. I had the same issues And anyone who's in this business and creates sustainability had to find a way to deal with the emotional aspects of what the business stimulates. And that's part of, and maybe the most important contribution to your potential success, is to understand not only the obstacles, but the potential solutions. And of course, everybody's different. So you have to kind of take ideas and concepts and then find how you can align them with your psychology. And that's part of the search, if you will, or research. So we understand this in the Trader Lab. We all experience it in the Trader Lab. And I can assure you, plug and play, from my experience and my observation of many traders, just doesn't work. And I'm sure you've all, visited other chat rooms, of course, or gone to seminars, read the books, all the influences out there. The only one thing you need, and where do you end up? The same place we've all ended up, no matter how we have gathered information, trying to replicate something that doesn't align. If that speaks to you, then come to the Trader Lab. Maybe we can help you on your journey. And again, what you do about it is up to you. We cannot control the markets. The idea is to learn how to control ourselves. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but we get into real time. If time permits, we will narrate the market together. Also, I have to remind you of another little tidbit here that's really important, because if you are interested in Bookmap, you don't want to miss out on the 4th of July sale. 50% off Global Plus and Data, and it's only good to July 11th, which means it expires tomorrow. If you wanted to get your hands on Bookmap, I don't know about you, I'd certainly be interested. And when I started with Bookmap in 2015, there was no sale. If I only had a time machine. In fact, that would work pretty good in trading too, wouldn't it? Now, in the Trader Lab, I shared 60 PDFs of structured trades. You'll see some of these today. They are not plug and play. And I understand most traders are so motivated by FOMO, and I call it the lunatic under the hood, that in spite of what I share, they're not going to listen to me. Why don't they listen? They hear it, but they don't listen. It's Hyde, Jekyll and Hyde. Hyde's the lunatic under the hood. Your primal wiring, the fight and flight and all this thing is always operating. It's always there. So we don't consciously make decisions. We just do it. And imagine being in a business, but you had to follow a certain path. For example, you want to be a surgeon or something, right? Well, they say you've got to go to pre-med, and you go, nope, I'm going to the operating room. I can do this. I've seen a YouTube video on heart surgery. Let's go. Think about it. Or you have to follow a process and have the discipline to be patient, to study, to go through the challenges of getting something that's not easy to get. And trading is not complicated, guys. What's complicated is developing discipline and taking a longer viewpoint of education versus hormonal stimulation, dopamine, and FOMO. I hope that resonates with you. And if it doesn't, that's okay. But understand that's typical retail trader behavior, and we know the failure rate is very high. You always need to be thinking about why. It is, and of course, because of ego, we think we're special. I mean, you all are special, of course, but are we special here, or are we just doing what other traders do who do not have the ability to create sustainability? I'm challenging you to step back and pause for a moment and not think of this as a video game, but as a high-level competitive business. And if you do not do things that work for you, you're going to end up potentially with a result that will not be satisfactory, because the business is not the next trade, it's all the trades. And without the proper behavior and discipline, then you really lower the odds of sustainability. And don't be fooled by winning trades, by the way. We all have winning trades. That's not the issue. Now, I have to tell you something, and this is probably something that you're not going to hear from almost any educator. I made an error today. Think about this. What does it take for someone just to say, yep, I made an error? And I'm going to tell you what it is. It was very interesting. There's components, and then I'll tell you, my thesis for today was what's called responsive selling, and then get long. So no shorts for me. I was looking for longs, and I have statistical probabilities, which I won't go into, except to say that for me, it's higher. Now, if you look at the market currently, as of this time, the market's making new highs, and it's getting to the targets I have above. In fact, right now, one of my primary targets is 63.24. We'll talk about that, which is, where is it? There. Current high of the day. But so that was my plan for this morning, to get long. But let me tell you about my error. And it's very important that you understand. Well, one thing, we all make errors, but the idea is not to make a lot of them. But for me, I make an error. I want you guys to understand we all make errors. And of course, emotionally, how do I feel about making an error? You kind of want to hit yourself with a 2x4 because it cost me. I lost opportunity, and I took a stop. And it's not about that. I always take stops when the trade isn't placed, at an optimal location, and there is no such thing. I'll take a stop. I'll put it doesn't matter. It's just whatever that is, that is. But I missed this. We opened. Let me get this here. It might be covered up. Guys, where did we open? Was it 06 quarter, something like that? Did we open around here? Could someone confirm that? It might be covered up. Yeah, okay, 775. Okay, is that right? Let's see. Oh, okay, thank you. 775. All right. So we opened here. This is yesterday's fair price. And the thought process for me was, we open in a fair price. I'm going to anticipate two-sided trade. And my thing is to get long. What I missed was that we opened, and in the ETH high, we had tested this yesterday's value area high. And this is the fair price. So I'm looking for two-sided trade, responsive selling, and then to get long. So my locations, I actually two locations here. I have a location here, come back to here, to come out the top and go there. The issue for me was, when we opened here, I was already engaging to look for this. And then things started going literally south. Now let's take a look. So we open RTH open, and we go up into this liquidity. Now I'm looking at the liquidity, and I'm going, well, okay, counter rotation. Come across, this is called developing volume point of control. This is the highest volume. Now let me take you back in the minutia. I know this is sitting here, and I know to go higher, I got to clear out the liquidity. So I understand that. But I'm looking for longs too early. And that has to do with the value area. There's a high probability that we will traverse a value area. And we know the market's long from the ETH. Okay, so I started looking for these longs. And so my first location to look for a long was right in here. So this one, so I took a long in here. Absorption. and I'm coming back in mean reversion. So I start, and I'm off sides, but I don't know it. So this was absorption going for this. I didn't get my scale, and as soon as I came back under here, I was out of the trade. Okay, now I have another location. It's getting very exciting. I get VPOC migration down. This is saying, and look where it is, too high. Language of the market. So now I'm going, well, what? What's the deal? So let's look. I'll show you. So I'm going, well, okay, that was not the end of the world. That's all right. Where's my next location? Let's come back here. So overnight mid, all these have high probability. That has high probability. That says high probability. And I see my liquidity lining up down here. This is the full session VWAP. So I'm going, well, okay, if I get into this area, I'm going to take a long back here and then to there and then out the top. Okay? I'm just following a plan, I'm kind of trying to stick to it, as they say. And now liquidity comes in here. So I'm going, all right, if we don't clear this, and now we're at RTH developing VWAP, now I can get my rotation, and I'm using the liquidity. So I had too high. This was the retail price from the ETH. It's called the overnight volume point of control. Okay, that's what set up my long. There was liquidity here. There was the absorption, icebergs, and then there was the reaction. So, stay la guerre, as they say. And then looking, so all of this was okay, but just not thrilling. So I get my selling here, and I'm looking now here. Okay, so far so good. I'm going, all right, now I'm going to start looking in here. Here I take a long, I get scaled, and again, I'm looking to come out the top, got to clear this, and I get taken out and scratch. Then I'm going, what am I missing here, This is not what I would anticipate. What I anticipated was the long, so that was okay. And I know that I had my sellers here, I had absorption here, and I've got this as my obstacle. So the idea of this was here to there, and then potentially out the top. I have to get over this thing. So, and then, not so much. So here to here, taken out. And then I see this, and I'm going, well, I got it taken out here. So then I'm going, well, I am now perplexed. And that's exactly how I felt about it. I said, this is just not behaving the way it might if we were going to, get going here. Look at this selling, And here's my buyers. They get slammed down again. So I'm seeing the sellers are still in control. I get a rotation here. I hold this, but I'm not seeing where's my strong buyers. I don't see them. I do see buyers, but I'm not seeing strong buying. And then my sellers are back in control. Now I break under here, and I'm thinking, wow, I'm really out of it here. Like what's my deal? So now we come down here. And we have something at 9:30 called the IB stat. There's a high probability, over 90%, past performance, not indicative of future results. We take out either IB high or low. And this liquidity is in the book. This is my next area to be stalking along. Now, but there's a bit of a problem. Actually, I'm trying to remember. You know what? Well, I don't know if I should be able to tell you about this. I did take a short up here, but I posted it in the lab, but it's not really a structured trade. And I was looking for it to possibly come out the bottom, but this was my obstacle. Posted that in the lab. So again, short, fine. but this. So right here, now I do trade order flow and I watch the liquidity. Resting liquidity is significant. Algorithmic is, you can tell the difference by the flashing, the bracketing flashing. This, just hanging out. Often what you'll see if you have resting liquidity is as the market approaches the liquidity, other liquidity jumps in front of it. They front run it. And sometimes it doesn't get here. Other times it does. Sometimes it goes through it. It exhausts and reverses. I mean, there's no absolute. So anyway, this was the short for me. It was actually over here. And looking to come out here. And we talked about this in Trader Lab because right here, this to me was a double bottom. And I saw the absorption. But also, let me just see if I can show this to you. There was a sweep somewhere around here. Can't remember. I don't know why it's not shown here. Hold on a second. Let me see if I can find this. I got to look at my, one moment, guys. Yeah, okay. It was, didn't get to it yet. So this to me is a weak low. This is my obstacle. And if I can get through it, I have targets below this. Remember, the ETH high was the value area high, and the ETH low was here, value area low. What I'm doing is I'm traversing what's considered the fair area, and this is the highest volume. So think about value area low might be too low, value area high might be too high, which is there, and I didn't actually see it. Still, my responsibility was covered up. I just didn't, brain not on. Happens. Not good. Happens. So I was going, well, if I clear this, I got this. Because there's a probability that once you come into value, that you might check the other side. But notice we checked it in the ETH and we checked this one in the ETH. Rather interesting, don't you think? So statistically, either ETH high or low, or value area high and low. So, anyway, this right here was not a long for me. It was what's going on for me. Now I'm right here, so I'm all scaled out. I'm hanging out. I'm having a wonderful time, and I'm looking at it, and this comes into the book. So I look at this, and I'm going, well, okay, where am I coming? I have to explain this to you. Now, this is auction market theory. Let me explain it. Right here is something I call a variable high volume node. This is the first location of the retail price or highest volume. It shifts down right here saying there's more volume here. Why is that important? Because the language of the market is saying, I'm not paying that, shopping, too high. This is why I took a short. Now I remember where it was. It wasn't there. It was here. Okay. Why? Too high. Also, yesterday's retail price, too high. I'm not paying that. And that created the short. Now, what do I know? Absorption here. I perceive it as a weak low. Buyers came in here. This is support right here because the sellers were here. See the icebergs absorbing the buyers here and even there. And then the buyers take control. So when I took the short, I need to clear this. And one of our participants in Trader Lab, Tapish, right when this was happening, was interesting. I'm looking at support, and Tapish was saying that we got to be careful, of course. And you always have to be careful. But the sweep, and this is where Bookmap comes into this, suggested that we could potentially squeeze. So this sets up a long. Now, for me, I was managing short, So as soon as I get the reversal, I'm out. My risk now is under here, and then I have to clear this. What do I know about this? I've got liquidity up here. So I know this is in here, and I have this. So this stays. This is the other part of it, too. as we're coming down, if you're looking at order flow, and it doesn't have to do anything, of course, it can stay in the book or it can come down and at the last moment, right, it can pull and open the hatch. One of the things. So I'm still seeing this in here. I'm seeing the icebergs buying, but the sweep tips me off. And support. All of these are material. Look where it comes in. So anyway, cover to short, get some pizza for the weekend, and this turns up our long, and then I'm coming back to the variable high volume node. And then I got to get through this, and then ETH high, and off to the races. Yesterday's high, where there's stops, and this is the target. Now I want to talk about this. Now we also can get the new all-time high, but that's not necessarily important at the moment. Let's look at this. Now, at the first hour's high, liquidity is in the book. And let's look how far it comes in over here. So I know we have to get through that. All right. We take it out. This is good. This now becomes support for me. Because the IB, remember, there's over a 90% probability to take out first hour's higher low, and you'll notice we didn't get below here. So what does that tell us? If the higher time frame trend is up, and remember my thesis for the day, which is not never anything more than just maybe, was longs. I just got kind of tossed around a little bit because I was out of alignment in a short term, not in a longer time frame. So that's life, you know. Now we come up here. We get through yesterday's high. This now is too low. This comes in here. It kind of it skews the book and you get pressure. This comes in up here. Now this is our next obstacle. Let's look at the behavior. And it's 63.20. It's a wonderful number. So what do we know about this? Buyers are here. I look at this as a form of support. We have something called a low volume node, which is an outside edge. The outside edge is created by urgency, aggression, and that means that we didn't auction here. We just ran. Now we counter rotate. Look at the selling icebergs. A lot of selling going on. So the question becomes, can the buyers consume the sellers, or do the sellers overwhelm the buyers? And that's really what this is all about, absorption. The buyers are being absorbed. And the easy way to think of this is Pac-Man. You know, who's consuming who? At times, the sellers are going to absorb the buyers, like here, and you're going to get a counter rotation and more buyers. If we get the sellers, that's the delta. I have here 76 sell stops coming out, but 714 buy icebergs. So what I know is the following. I have my absorption of my buyers here as an example. Selling icebergs, absorbing the buyers. The sellers are here. 124 sell stops coming out. Why isn't the market going down? Well, one thing, maybe this is support, and maybe these buyers, there's icebergs buying here, icebergs buying here, absorbing the sellers. So order flow doesn't tell us, of course, what will happen. It can tell us what might happen. And then if we can read it, we can, as they say, act accordingly. So when I see this, I anticipate counter rotation. I know this is here, and I know these sellers were taken on by the buyers, the aggressors, and they got run over. I have this come back in here. This is my risk point. I'm underneath. The risk for me is underneath the IB, and that's aligned with this. So all this has alignment. This is a low volume node. One moment. I got to turn some levels on for you guys. One moment. How are you guys doing in YouTube today, by the way? Thanks for visiting the Trader Lab. Hope you're going to get something from this. Apologies for the delay. Technical issues, as we like to say. So anyway, support. Now, And again, I'm above this level. I'm above this level. In Trader Lab, and this is more advanced, this is long. Because why? It's resistance. It was too high. And you guys know the concept. And here's another one. It's not only is a variable high volume node, which we rejected, it's this level, fair price from yesterday. So we checked that price early, too high. Hasta la vista, Tom. We'll see you later. Down we go. We find our buyers. And now what was too high? This. If I get above it, this, I can get long, or because remember, the context is up. Under other conditions, no bueno, as they say, or I say. And then I have this. So this is a call based on your understanding and your trade plan. I can take a long here under this condition. And that's because if this now becomes too low, I'm going to potentially go back to what was too high. That's kind of the way I think. I'm not saying it's good. I'm just saying it works for me. And it's based on auction principles. So out here, this is a low volume node. And a low volume node, it's covered up. I think it's in here someplace. Come on. Nope. Somewhere. This 401 that you see. There it is. So this is where the least amount of volume took place when we ripped through. That is an outside edge. Now, what does an outside edge represent? Once we rip through here, and don't forget, notice where let's just look at this for a moment. Sellers were there. There's the liquidity. There's the iceberg. The sweep was here. That says get long here. You would need to go there. And then you got to clear this. You clear this. It could also be a long. And now let's go back and think about, you got to get through this. The better trade, believe me, is here because you got that and this. Once I get above this, it is now too low and I break high. Now I'm taking you back to where we just were. Now, when I break high, this becomes support. It's a low volume area. Market didn't trade there, didn't spend any time, it didn't auction, it just went, we're out of here, see you later. Now notice what happens. If we come outside, and this is, you don't know how far it'll come until hindsight, so let's get over it. Nobody predicts anything in this business. The best you have is maybe. But I do know this was resistance, and the old concept is resistance becomes support. So stop stays under here, and then, get risk neutral, put a helmet on. We have yesterday's high. What's over yesterday's high? Stops. Target. Let's just keep going. So that's, and notice the liquidity. Where was the liquidity here? Liquidity comes in here. Obstacle. So if you're working with this, you could be using this as support, subject to time frame and how you manage your trade. You could be targeting this per scale. Up to you. Stops are over yesterday's high. That's your fuel. And its absorption was here. We come down. Now you don't know, but once you break above the sellers here, then you're looking at this. And your stops can go under here, or you just stay out here. It's all up to you. Now, low volume node. Let's talk about this for a moment. We have a couple trades in the Trader Lab, and this is, if it comes out here, this potentially could be a long. It's called mean reversion, and it's outside in trading. So I know if I'm going to look in a long out here, it would be potentially in this area. So I can get the stops under here, counter rotate, and then take a long continuation trade. It's a structured trade. There's another trade in Trader Lab, which has not showed up yet. It's called the IB continuation trade. It's in that 60 PDFs of structured trades. So you have this, as a potential long, not a recommendation, and you have out here to come in. So this area would be a continuation long. It's not a recommendation because subject to what happens up top, there may be nothing to do. You have to read it and have a plan for it. So now let's look. Outside edge, break high, absorption, break high. What's going on over here? Liquidity comes in the book. Now remember, we're talking about 20. When this happens, and I was narrating this in Trader Lab, this is an issue. In other words, this is resistance. So what is happening up here? I've got my icebergs, I got my sellers, I got this liquidity. Right here, we get our buyers, they are absorbed, and you get your sellers. Now, and this was all discussed in Trader Lab. Where might we come? Well, we got yesterday's high, and we got out here. So those are the possibilities. And for me, I'm going for a target called that. And, all-time highs are possible, but in my trade plan, I just work statistical probabilities. So anyway, this is our obstacle. And we had a good conversation in Trader Lab, and I'm going to show you something very interesting here. We get this seller. Now, and as soon as this liquidity clears, this liquidity comes in the book. And I'm looking at this, and now I'm going to take you back to a couple ideas. Right here, you see the delta. This is, and we don't know until hindsight that that's absorption. If I know it's absorption, let me put a little box around this for you. I'm just going to show you an idea. And the only thing, and what I'm trying to do here is not show you anything mechanical. It just doesn't exist. What we tend to try to do is understand what's happening. And again, you're not going to have complete information until hindsight. So what is happening here? Let's look at this. And you won't know until it does, So what happens here? Buyers, there's your icebergs, red delta. What happened here? Buyers, see the iceberg? Absorption. Notice the liquidity in the book. Here, absorption. The buyers get above the sellers. Liquidity is in the book. Break high. Resistance. Liquidity is in the book. And this is where you start scratching your head a little bit going, what's going on? Well, this comes in. What do I know? I know my buyers are here. I break down. What does this set up in Trader Lab? In alignment with yesterday's high absorption, it's a potential long or nothing, and your resistance is 20. So if you got long here, you got to deal with 20. Now, this comes in, and we talked about this in Trader Lab. Isn't this interesting? Okay, so I now have liquidity. I tested my absorption. I have my location, and I have a rotation down. Resistance, support, stop stays under here. Once we get through this thing, it can act, and this is not a recommendation, like support. Advanced methodology, not a recommendation. Remember, we all take stops. We all have regret because hindsight is 20/20. Let me show you. And now the thing that makes this workable for me is something called context. This same process under different conditions will create a lot of pain and losses. That's why trading is not mechanical. So what do I know here? I know the buyers are here. I know the buyers are here. I know the sellers are there, resistance, and I know the buyers are here. I know that, so I got buyers, buyers, buyers. Sellers, only counter rotations. Sellers, only counter rotations. Obstacle, counter rotation. Could be the end of the move. Who knows? Right there. So if you got long, you got to scale. Get risk neutral. You get long, this is still here. Teeth chatter, got to get risk neutral. Same. Okay? Come back here. What do you think emotionally? Oh, I'm going to get stopped out. I should have got out there. You ever hear that in your head? What do I know? Buyers are here. Never mind how I feel. What do I know? And I also know this could be the high of the day and it could come all the way down. That's what I know. I don't need to know anything else. I can't know anything else. Absorption. Notice where does the liquidity go? It's pulled, it's gone, bang, and that. Okay, so now I get through. What is this now? Support. This is a potential long in the Trader Lab. Where am I trying to go? There. Trade finito. And notice what comes into the book. Notice what happens right here. What is this? They start front running. In other words, everybody sees this come in over here. Let me ask you a question. If you see this, are you going to put your order there, or are you going to give it a tick or two in front? Are you going to put your order there, or are you going to put it a tick or two in front of the target? That's it. And that was it for me. And by the way, no clue. Oh, look what we're doing. Okay. Oxygen for me, questions for you. I hope you're getting something out of this. This is really what this is about, is just having a plan, knowing that you have an edge, accepting the random outcome, because this is called trading, and trading is taking risk in exchange for outsized rewards. How you guys doing? Please give a like if you're visiting at YouTube. Delta is the aggressors. So market orders. That's really what Delta is, because there's two sides in this. There's the passive side, the limit order book, and there's the aggressors. And when somebody crosses over, let's just say it's a buyer, they're lifting, they're going to pay, let's say, a higher price. You got to have a passive side there to take the other side of the order. That's what's going on up here. The delta is this. So those are aggressors. And what creates aggressors? Initiators, market orders, but stops become market orders. So we see the delta, the aggressor. Now, the thing about this is the fact that there's an aggressor is only one piece. It's what happens. Well, because we can see stops and icebergs and liquidity, we need to see the reaction. It's Pac-Man. So the delta is eating up the sellers. That's why the market is going higher. They're cleaning the book as they go. They're lifting. Well, at some point, if we run out of buyers, and it's not initiative buyers, it's just buyers getting squeezed out, and the sellers are on the other side, and right here you see the sellers start coming in here. So what's happening here? Buyers, they're making less headway. So I have buyers here, sellers are there, and sellers are there. I have buyers here, sellers are there, sellers are here. Market comes up. Why isn't the market going up? Sellers, see the icebergs? Sellers. Market comes down. Buyers are trying again. There's a buyer there. What happens to him? Sellers. Now, watch this. Right here, I get a sell sweep. When I get the sweep, I'm anticipating an upside rotation. And again, this is my target. So, doesn't mean anything. It doesn't mean I take a long because my longs are over. And that's it. Now, let's come back. Low volume node. That says in the microstructure, what do we know? In a higher time frame, or the RTH time frame, too high. What do we know in now as we go down in quote time frame or fractals? Too high. What do we know out here? Outside edge of the distribution. If it's going up, chances are it's going to hold this area and come back there. If it doesn't do it, that's called mean reversion, by the way. If it doesn't do it, then this out here can become resistance. I'm going to drag this over and let's just see what it does. These are not trade recommendations. Remember what I'm saying? I said it could. And another word for it could be this is it might. In trading, the best you have is maybe. So maybe we just come back here, test yesterday's range, come out to this outside edge, and then rotate to the high volume node. Right now, this is our area of potential resistance, and so is that. So we're just going to watch this right now. I don't call trades. I take my stop. I don't want to take yours. My stops are just like yours. Same thing. They might happen at different locations. I take stops and I'm perfectly okay with it. I don't know what the market will do. I just know what it might do and where, and I know if I have an edge. And just like casinos, I am going to pay the gamblers. Casinos seem to be okay with that. So I don't have any shorts, okay? For me, the long trade was to here. Now, when I say I don't have shorts, I'm going to say the context may be changing, and now we're going into rotation. It doesn't mean that we might not take this high out at some point. If you're a counter trend trader, you might be taking a short here. But if you're a developing trader, the better plan, in my opinion, and you have to vet this, is not to fade this market, because we're in a, quote, bull market at the moment, theoretically, and we can certainly challenge the all-time high if we clear this. So what's the better play? Well, if you're a developing trader, you might be done for the day, and that would be a successful day. If you're a compulsive trader with the FOMO thing going on, then you might be selling this, buying this, and just ripping yourself to shreds. If any of you do that or have done it or still doing it, then raise your hand, but I won't look. Patience is very important in trading, and knowing where your trades are, and then also knowing that the payday for most of us is catching the rotations, not, and I'm not saying you couldn't short this if you actually had an edge, but you might not have an edge in this. You might only get a counter rotation and then new highs. What do? Is this trade, if it was a short or this is a short, the same as getting long from wherever it was all the way down here up to the target? Which trade will pay you potentially? The one that's with the trend or the counter trend? And yes, this can do whatever it's going to do. We can come to mid, VWAP, if we clear this. So we'll see what it does. But the fact is, if you don't have an edge trading this counter trend trade in this context, then you're really a gambler. And over time, in spite of winning trades, the potential for sustainability is not so good. Just saying. So notice the behavior. Just saying, notice, nothing more. Does this look familiar? Remember, break low, break high, support, target, break low, test, resistance. And then whatever, maybe back here or not. Not a recommendation. This would be counter trend, and I'm quite okay. And I always suggest to traders in Trader Lab, if you can't trade with the trend, you have no business doing this, because it requires more skill, because you're trying to pick the high of the day. Now we have this, but if you sell this, you're standing in front of the locomotive, you see? So, and if you can't manage yourself, and remember why. So let's just watch this. It's a curiosity. It's nothing else. Here's the other part of this. We fell out of this distribution. This is the low volume node. It's like saying, that's too high. This is the retail price. And if it's too high, we might go, nah, I'm not going to pay that. If we fall under here, then this is our outside edge. So we have resistance here and at the moment there, but the trend is up. So what do? Do you short this? Does that give you an edge? Think about it this way. The market is long. There's sell stops following the market up. We counter rotate. We take out stops. There they are. And we have icebergs taking the other side. We have liquidity come in the book here. Notice the behavior. And we have this up here to watch. So we have this it skews the book. And what happens over here? Now you want to watch this area right here. So we're just going to watch it together. In the meantime, let's just hang out. How you guys doing? So what does that tell us? Look at what we're doing here. Our next resistance is going to be here. And if we clear this and this, then we have our good friend up here and wherever. Let me just see if I have any targeting up here. Actually, we only get once, if we get above the all-time high, we get into measured moves because there is nothing up there. So let's see what it does. Now, for me, I don't have a long here. I certainly don't have a short other than a rotation. I don't have a long here. Because then I'd be in the FOMO world because I have my resistances sitting right there where that HVN is, this one. So we'll see what it does. So for me, I don't have a continuation. I don't have a location. I just don't chase it around. This would be of interest to me here. You know, test yesterday's high, maybe pull some stops, come out here, and then have range. If I don't have range, I don't take a trade. It's more important for me to get risk neutral. There's always another bus coming, you know. And again, that's just me personally. It doesn't mean you can't do anything. But the more FOMO or emotional stimulus you feel like I got to get it, it's going to go to the moon and all this stuff, that will take you out of the business. Ask anybody who's been trading for a while. Because we all go through this stuff. Oh, it's going to go up and it's going, you know, we get opinions. Wow. Notice this is coming in and this right ahead of all-time high. Is that interesting? So the high volume where we had our sellers is right there. So to go higher in the market, don't forget the context is up, which is why no shorts for me. It's here. So let's just see what it does right here. So they're not shorts, okay? This is resistance. That's all it is. And support out here. Now, so we didn't get there. The buyers are here. This was the last long. This right here was support, which becomes resistance. No way in here. This is our resistance, and this is our resistance. And trend is up. So let's see what kind of behavior we get in here. Trend is up. That's absorption. There's your buyers. That's resistance. This is absorption. This sets up your resistance. So let's see. Now, when I say resistance, I'm not saying you short it. I'm saying it's an obstacle. So if we clear it, then we got to get over the high. And this is the same as that VHVN that became support. It was resistance. That was the last short I had. Counter rotated and came back through it. Then that sets up continuation longs. Now we hit this, same behavior, bounce off it, rotate from here. And then if we find our buyers and now we clear this, it sets up all-time high. But we got to clear this right here. It's all very sequential. It's really not complicated. What it is random. And it requires you narrate and anticipate. So I anticipate a potential reaction here. It is not a short for me. And it doesn't matter if this thing does the Acapulco cliff dive. If we do the Acapulco cliff dive, I have ways to get in. I would not be fading this because the buyers are still in control. So let's see what it does. You guys have questions? Yeah, Dan, you're welcome. See, the thing about the auction is to understand how the market works, but also to be able to read it. Now, what I found for me, I don't use indicators. And that doesn't mean what you should do. I'm just talking about what I do. Believe me, I've used them on steroids. Built trading systems. I'm just saying, as I understand indicators. And for many years. But I always had problems with them. So I thought more indicators, more time frames creates more certainty. You know, you guys do the same thing. Then they're done that, not interested, because it didn't work. But I did have winning trades. Instead, what I found was if I can learn a language, what does it say? Then maybe I can understand better what's going on and be able to act not based on if I have an oscillator that says sell, what do I do here? Or over here, I chop. By the time it turns over, I'm getting where? I'm getting long here? No, I'm not getting long anywhere because I already hit my target. Now, if I break above here, I'm going to be looking at behavior. And I'm still going to have my low volume node down here. So now we're just going to watch this. And again, no shorts for me, longs only. So I had to learn to read this language. And if I understand it, then I can maybe do something with it when it's in alignment. So if this is resistance, the fact that it's resistance is not a reason for me to short it. It's a reason that if I had a long continuation trade, to target it, not to fade it. So, and I don't have a location right here. You know, I have a location more down in here. So I don't have that. So I don't take a long here. But if I was long from somewhere that is a vetted plan for me, this is where I'd be going, because this is where my sellers were. Look what's coming back in the book over here. Now, what's going to happen? I don't know. But when I'm trading what's called the auction, and this is the auction. This was too high. And it doesn't mean it'll stay too high. But the reason the market came off from here was, why? Too high. There's your sellers. So I get my buyers coming back, and I'll notice there's less buy volume coming up, less volume, less buy volume. What is that telling me? The buyers are getting weaker up here. This is also delta. The buyers are getting weaker, and my sellers are in control from here. That's why this little line is sitting here. Now you guys track it. Now this is the auction. It doesn't mean you trade this. What it's about is being able to read it. I'm not waiting on an indicator, and I'm just as clueless as everybody else, but I'm not ignorant. The market is random in the sense of how it rotates. You know, I mean, why did we stop here? Because the buyers showed up. Do I know where that's going to happen? No, I can't know. But what I know from here is this was too high. That part I do know. What I don't know is, are we just going to come back and come through and continue on our happy way? Or are the sellers in this, are they going to show up again? And yeah, There they are. Now I have to see when we come back, how do we behave? Do we just come out here because the buyers took control over here? Is this now support? Or are we still too high and we're going to now take out the stops under here? I can pose the questions. I can't give you the answers. But in advance of what happens, I can suspect, and that's the best you got in this, where it might, another word for maybe, happen. And it might happen here where I find my buyers, might find my sellers there, which I did, and I might find my buyers here. If I get below here, I got my sell stops here, and then I can come back and start observing other locations for potential continuation longs. The thing I have to not forget is I hit my primary target. And it doesn't mean after we take some of the weak longs out, which we might, that we don't get our buyers who accumulate the sell stops, the retail weak traders like us, and then we rotate back to a level or not. So we'll observe that together. Does this make some sense, guys? JJ is asking me about measure moves. The only thing I really use is the IB extensions once we get up here. And if I have, a flag or I have something, the old standard classical bar charting, the question that JJ Marks is asking, and thanks for the question. He's in the Discord Trader Lab. And JJ, I hope you don't mind, but he has a background in psychology, and he does a lot of posts to help us understand the mental side, primal wiring. Why are we lunatics? And what is a lunatic? It's somebody who is hard to say, of course, but you're being influenced by external inputs, whether it's hormonal, sociological, or otherwise. And JJ, I'm not speaking for you, but basically, he shares a lot of that, and that's just part of the contributions that are available in Trader Lab community. It takes a community to leverage our experience and all become better. Can't do it on your own. I can't do it. Notice where the high volume node is. Let's look at this, and I got to answer your question, JJ, about the measured moves. I use the IB extensions. Also, you can use any classical bar chart, our old stuff that we all learned in the Stone Age, pennants, triangles, any of that stuff works as well as anything. And it's not necessarily, I'm not going to use the term good or bad. I'm just going to say it's still random. So I tend, like, for example, this is 2 times the IB. The IB is the first hour. So JJ, look at the alignment. 2 times the IB, target, naked volume point of control. Kind of interesting, isn't it? So I had alignment here and there at the same place. That even reinforces this even better. Now there's more if we go up the food chain as far as extensions, but that's kind of what I use. I primarily just use the auction because once I get up into Twinkie land up here, there's really nothing except for liquidity. And we don't know if this has any intent to trade. But why is that liquidity there? And this isn't for you, JJ Marks. This is just for everybody. It's front running the all-time high. So does that suggest that we're going to trade this out? All I can tell you is maybe. Because for this to go higher, I got to get above that. Right there. And that's the auction, the high volume node. What's on the other side? This high volume node. Support, resistance, microstructure. And as Dirty Harry used to say, do you feel lucky? Well, do you? If the trend is up, do you buy the pullbacks? Do you sell the resistance? Do you fade in an uptrend? Or do you just buy in an uptrend? Are you a counter trend trader? And we're right near all-time highs with resting liquidity? Or do you see this and you're already anticipating a test here? There's your selling delta. Remember the question on delta. Why didn't the market go down? Absorption. What does that mean? Potential to take this out, and if I get through there and through there, of course, the high, then there. So if this is too low, if this, and I get my buyers, then that. If this is too high, then what? And back here. If not, if this is not too high, and I can get through this key location, then what? Maybe that. That's a narrative, and it's all from reading the tea leaves, not from any indicators. If I'm waiting on an indicator, and then how many of them? What happens if one indicator says the trend is up, another indicator says get short? Are you selling? It can't go any higher. How many times have we all said that? This must be the high of the day. Really? Well, I'm not so good with picking the high of anything. So I don't try to do it. I'm more of a retracement trigger. In other words, when I have a trigger, I'm always looking at why. Why did the market go up here? Because of the absorption. And I don't know if the sellers here are going and we get the buyers here. Who's going to win? The buyers. So where's my resistance? Where the sellers took control. There. Where did my buyers take control? Here. Sellers, buyers, sellers. Now this is a bullish scenario. The highest volume price or retail price for the product is now here. Here's what we can anticipate. Potential continuation north. Let's see what it does. Not a recommendation. Does this make some sense? How are we doing in YouTube? Please give a like if you're hanging out. Yeah, you know what? And repeat, thanks for that. Posting that chart. That's very interesting. When you box these things out, it just helps you define structure. Otherwise, you're going to look at this. If you just have a chart, you're looking at, what are you seeing? Do you understand the structure? Because it's speaking. It's telling us the buyers are here. That's what it tells us. Doesn't tell us it's going to go up. It tells us there's buyers. If the buyers are absorbing and the sellers were there, which is why you have the delta and then a counter rotation down. I know there's a seller, passive seller. But there's a passive buyer. There's my iceberg. Liftoff. Same thing here. Passive seller. There's the iceberg. What happens here? Passive buyers, sell stops, support. What's the trend? North. Do you feel lucky? Would you really short this market? Even though you see, the way I think about it is context is number one, which is north. When I see selling, what does it suggest if the context is north? It suggests counter rotation. Does it suggest get short? Not for me. What does it suggest? Don't get long until you come to the other side, and then you're going to look and see if the buyers who were here and the volume, which was there, and the buyers took over here. See, once we get above these sellers, which were there, buyers are in control. Now my sellers, don't forget, we're here. There's my sellers. But what about my buyers? They were here. This could be a long if it's in your plan, or it's nothing. I'm just showing you structure. You could do whatever floats your boat. Now this moves up. This is called VPOC migration. So this is the new retail price. This is the previous retail price last time we were up here. And where's my sellers again? Notice where they are. Notice where they are. Notice where they are. Can you see how you can start putting pieces together? Now, does that make this a short? No. What does it say? I have sellers here. What are the buyers doing? I would say every time we get a counter rotation, unless it changes, these buyers have quite an appetite for the product. And we're making higher lows. Do you feel lucky? Do you want to fade this, or do you want to be taking continuation longs that are aligned with your plan if you have a structured trade? This moving up suggests north, not a recommendation. We can still rotate. Remember, you could do this. You could do anything. But what do I know? What do I know? Support. What do I know? Resistance. Notice what's happening over here in the order book. Let's watch the order book together. This is the beauty of a tool like Bookmap, is we don't, look, no tool gives you the aha predicted. You know, we're not in the business of predicting. We're in the business of alignment. So the idea is now we know we have sellers who want to sell up here. What we do notice about this is the buyers were making higher lows. The buyers are here. There they are. Sellers were here. There they are. The buyers came for it against this structure. When I'm discussing fractals with you guys, what I'm talking about is distributions or structure. Inside of the chop is an auction. Sellers are here and the buyers are here. The high volume inside is your retail price. Think of this like a store. I'm not paying that. Yeah, but it's on sale. Retail. If the retail price becomes too low, we'll leave it and we'll come back to the last retail price that was too high. Then I'm not paying that. We come back down. But where was the retail price too low? Here. In an uptrend? Potential long. To where? Now this is scalpy. I'm not saying anything more than market mechanics. To there. See, there to there. Then what? Sellers are here. Liquidity is here. Now in a higher time frame or fractal, this is the retail price. Let me take you down into multiple concepts here. Think Matryoshka dolls. Vertical integration of time frames, as you think of it. In the auction, it's not time-based. It's just participant-based. So how long does it take for this to happen? Well, whatever it is, it is. It could be 10 seconds and an auction is completed. We don't know. So when I get this, I know this is too low. I don't know if we'll go through it. So that part we don't have. But in an uptrend, this is the long, this is your resistance. Now what? Now I'm going to take you into a fractal concept. Let's just stay with me. This chop thing is an auction. It creates something called a distribution of volume. So we're doing this kind of a thing. The high volume is there. And that's only for this. For the whole day, this yellow line is the highest volume for the day. This was the highest volume from a previous day. How does the market potentially work? It's shopping. If this price, which acts the same as that, higher time frame is the yellow, it's for the full RTH session, and this is just in here. It's called fractals. When you break high and you come back to this high volume, it's called mean reversion. That's the mean. If it's too high, we come back to this one. If it's too low, we come back to this one. And now to make it really nutty, in the RTH for the whole day, this is the retail price. And what we can do here now in fractals is we can rotate and do mean reversion. We have to clear this to go higher. Okay? So if I have a rotational plan in an uptrend, all I'm going to do, unless it falls apart, is buy it. And use these resistance levels for scales to get risk neutral. So long to there. Then put on a helmet. If I can't clear the target, which nobody knows, then I can take out these longs. And if that happens, because I'd be risk neutral, 4 points or so to get risk neutral, it fits, then you're hanging out and your stop would be under here. If we come back here, you'd scratch the trade and you'd have a few choice words, which we all do, And then you go on. You just go, okay. See, the thing about trading is it's not the outcome of the trade. It's because if you follow a plan, you're going to take stops like we all do. You're going to get scales and get taken out. And at the end of the day, it's really about following your plan that has a statistical edge, not making it up or playing a video game. Profitability comes from executing a plan with a statistical edge. We are in an environment that's 100% random 100% of the time. In other words, a tweet or whatever happens, a piece of news, some kind of external input disrupts the auction, or, whatever happens. So we have no control. We have control over what we do, not the outcome. So we have to come to this business with a plan. And then before you even put your first trade on, the idea is that you know where you're going to trade, not what the market will do. That we don't know. Part of the thrill. What we do know is the buyers are here and the sellers are there. We know this is the retail price in the developing time frame. This is microstructure. And if I can get above resistance here, and this, of course, this is the same thing. This is the same as that, is the same as these in fractals. Do you guys understand the idea of fractals, by the way? Oh, you're welcome, that dude. How you guys doing now? If you're visiting in YouTube, please give a like. Encourages me to kind of continue. There's no cost for this, and Trader Lab is a community that's available to all of you. There's a link in the bottom of YouTube if you're inclined. Also, I got to remind you, while we're waiting for this thing to ferment, that Bookmap is having a sale. That's pretty cool. I don't know where that went, but let me see if I can find this for you. There it is. And this ends tomorrow. If you ever wanted to try Bookmap, there's monthly subscriptions and all, but I'm going to tell you, this takes more than a month to learn. Anything that's a high tier tool, it isn't plug and play. In fact, trading is not plug and play. I know, like, I share 60 PDFs of these trades I'm discussing, and a lot of this was done not, there's no trading course. Traders were asking me many years ago, about 5 years ago now, 4 years ago, what are you doing? Always a question sometimes I ask myself, what are you doing? Well, what I'm doing is I'm following structured trade plan, and I gave examples of different processes, but they're not plug and play. I pointed out conditions and things that traders would be interested in, and targeting, where all this comes from. Same things you see me doing here. The thing that most traders tend to do, and it's really because of FOMO, is not reverse engineer ideas and find what fits for them. And then again, what doesn't. Not everything works, of course. And our nature is to just copy what somebody else does, and because we're in such a hurry, right? Well, being in a hurry is actually what will take you out of the business. I watched a webinar, and I've known this, of course, from my own experience, going on 46, it is 46 years already. But to really master trading, this is not a short-term thing, This is not 6 months and now you have an ATM in the basement. Linda Bradford Rashke recently, there was an interview I just happened to watch over the 4th of July weekend, and they asked her, well, how long did it take you, to kind of get your thing together? And she was in the second edition of Market Wizards. She started on the floor at the Philadelphia Options Exchange. It took her 10 years. So I'm not saying it'll take you 10 years, because she started when I did, and we had no information back then. It was just very much classical bar chart. That was it. Get your ruler out and draw a line. Oh, we got a trend line. That's exciting. And measured moves. Classical bar chart. So that's how I started out. And same thing for her. So our learning curve was much steeper because we didn't have technology. We didn't have computers. There were no PCs, no internet, nada. So learning was really difficult. It was trial and error. Really took a long time. Took me a long, long time. I didn't understand the business I was in because I thought, and I shared an office with George Lane. And those of you who know me know my story, but George created stochastics, which is an oscillator, as you know. So I'm sharing an office with George. He had an Apple One. So I went high tech. I got an Apple IIe. So that's how that was our early computing, you know. So anyway, I saw stochastics and this is before we understood divergence. Oh, the line crossed over. So, think about it. That is the holy grail, right? How many of you in love with your MACDs and whatever, your RSIs and whatever the heck else it is? We all love everything. Fibonacci, it all works sometimes. No, the problem with a random environment is everything works at times. The problem is everything works at times. And the problem is randomness. Gamblers get paid when they go to the casinos, right? So everything works. But it's not sustainable if it doesn't have an edge. That's the difference. The casinos pay the gamblers, but over time, because they only play games with an edge, they extract the dollars from the gamblers, even though there's cost of production and overhead. Now, because we're emotionally attached, we can't deal with it. We want certainty. So we go on the quest based on our primal wiring to avoid risk. And because we're driven by fear, really, we're going to pile on the spaghetti to create certainty and the term confirmation. They don't exist here. And the dilemma for me, and I even built trading systems so I could do optimizations, which I thought is what was needed. And based on the literature that I was reading at the time, systems seemed like a good way to integrate multiple time frames and multiple spaghetti. It still ended up with the same outcome. I did it better because then I had a PC ultimately that would do it. So that made it, quote, easier to end up with the same outcome. But the work still had to get put in, right? So I always kept coming back to the same place, and I coined a term called Trader Groundhog Day because I'd always come back to the same place in spite of winning trades, in spite of winning weeks. I always came back. And I'm saying, this is crazy, And I thought I just had to work harder, do it better. Well, what I did not understand, and I'm sharing this with you, it's just part of my journey, and unfortunately it took too long, because when I started trading, there were no off-floor traders. All my buddies were floor traders. Just the way it worked out. And I was at the time, my goal was to get a seat and, go down CME. And initially, I started trading grains. I wasn't even, financials were just, oh, that's interesting. So I started out trading grains, commodities, commodities. So, and this was before the S&Ps even were available. So, but I always had liked the stock market. So I gravitated, we called them pinstripe pork bellies. Don't forget, the business futures were commodities. That's why futures were created as a hedging vehicle for farmers, with crops and all this kind of stuff. So just so you know. So anyway, that's where I started, and there was no information. So I grew up as indicators came into the public space. So I thought that was the answer, was actually the problem. I didn't understand gaming theory. I didn't understand probabilities. I didn't understand edge. I thought it was just getting it to work better. No, not. Nobody told me because nobody was doing it. Or if they were, I didn't know them, and I was sitting down at the exchange. You would think you'd run into somebody, So we were all kind of, the blind leading the blind. So I put my beliefs in a place that I didn't understand. I was in a business of gaming. I did not understand the business I was in. I was trying to solve for my psychological needs, which is certainty and to avoid risk. I know, right? You too, right? We want certainty. And we want to watch what happens right here. Very important right here. It's either going to blink or blink, Let's see what it does. Remember, guys, key location, we clear here, potentially there. This is not a recommendation. And then you got this. So these are areas to observe. And you remember, trading is about vetting Only engaging when you have a statistical edge. If you're interested in learning more about the business of trading, how to build trade plans, create edge, and learn discipline, which comes from edge and statistical probabilities, visit the Trader Lab. Use the link in the bottom of YouTube. There's no cost. There's a lot of additional education at no cost in the Trader Lab, and you'll have the Trader Lab community, the Bookmap server. Learn about stocks, options, crypto, how to use a high-tier order flow tool like Bookmap, market maker behavior, algorithm behavior, and a lot more. Don't forget to leave a like. Hope you got something from this. I look forward to seeing you guys real soon. Trade safe, and if you want to gamble, be sure to go to casinos, get the cocktails and the ticket to the buffet. If you want to be in the business of trading, I'm going to suggest don't gamble. Thanks again, guys. Don't forget to leave a like. And thanks for visiting the Trader Lab today.